the weight of capital it has been going towards some of the living sectors more recently, and so there's always that risk of, do they get overheated? And I think that's why you've still got to be good at your asset level underwrite all the time. Clearly there's sort of been a levelling as interest rates have gone out. All sectors to some extent have rebased, sort of started the horse race again, but you've still got to be good at asset level. You can't just pick a sector or just spread it everywhere and think that it's all going to work. The key thing is getting the right team in to run that Spanish business as well. And me being based there for a bit is going to help that as well. So sort of as you'd expect, sort of running a business, 30 or 40% of my job is growing new things. That is clearly a new thing we're growing. So that emphasis there is focusing and helping that team grow it. How are we bringing people on? How are we mentoring them? How are we giving people just opportunity to do work that they enjoy?
Welcome to another episode of the People Property Place podcast, where we speak to the movers, shakers, innovators, and leaders in the real estate investment management space. Today, we have the privilege of speaking with Ed Clough, Managing Director at Octopus Real Estate, a specialist investor, developer, and lender with a keen focus on the living and healthcare sectors. Under his leadership, Octopus Real Estate oversees a staggering £3.7 billion worth of assets for both institutional and retail clients. Ed joined Octopus in 2017 and previously led the care homes and corporate development teams. Prior to joining Octopus, he was a lawyer with international law firm Allen Overy, and he holds a BA in economics from Durham University and an MBA from the University of Cambridge Judge Business School. So, without further ado, let's dive in and hear from the man himself. Ed, welcome to the podcast.
Thank you for having me.
Not at all. Well, thank you so much for squeezing me in to your very busy schedule, because I know that you've got a big move coming up. And actually, by the time this goes out, you'll probably be in Spain, but a little bit more on that later in our conversation. But before we get there, can you rewind the clock and tell me a little bit about chapter one, university, because you did law at Durham, right?
Economics, then did law afterwards.
Economics,
so, yeah,
fine. So what was the mindset and the approach, and was property on the scene when you were choosing economics?
Not at all. So sort of enjoyed economics at school, had a look around stuff, did really sciencey A-levels, so nearly went down that route and just decided, look, I'll have a go at economics, see how that works out. Really enjoyed the course, and then sort of, I think at that age, you're young, sort of looking for the next thing. The law firms came recruiting and sort of jumped onto that sort of route of law conversion and then into a law firm, yeah. So
kind of growing up, what kind of kid were you? Were you particularly academic? Were you particularly studious?
Yeah, I worked pretty hard, but had plenty of fun as well, I think. Like loads of sport. I've got a younger brother as well, spent most of the summers and winters playing sport. We lived out in the sticks, so there wasn't a lot else. My wife still sort of jokes around. She grew up in London, so what did we do all day? What did we do at the weekends? What did we do in the summer? But for us, yeah, loads of sport, being outside. But yeah, worked pretty hard as well.
And so were your parents in real estate, or did you have kind of real estate as an industry front and centre?
I suppose, yeah, my dad is in real estate, but I suppose sort of parents that didn't push me down any route, or my brother sort of, we just did what we wanted to do. So hadn't really considered it as sort of where I'd go, where I'd end up at all. Sort of just went out and found my own way, I suppose.
And which part of the real estate space was he in? So he was doing retail and leisure as an agent. So spent a long time doing that. Different from what you're doing now.
Yeah.
So you kind of joined, was it Allen Overy as your first job out of uni?
First professional job, yeah. So sort of did a couple of years law conversion, then started on that training scheme at A&O. Really, really great training, great people. Awesome firm, like lots of hard work, but lots of really, really interesting work. Spent about a year of my training doing derivatives, structured finance, that kind of thing. It was sort of financial crisis just coming out of the back of that as well. Spent a bit of time in New York after that. So you sort of saw what happens when markets go wrong. I think one of my first jobs was sort of serving default notices on Icelandic banks, and hundreds and thousands of these things just sort of coming through. So you get a good sort of feel for the financial markets there. Ended up being a litigator. I sort of figured if I was going to be a lawyer, I wanted to do the law. I also quite like being in court. So for me, that's sort of where I started, and saw quite a few sectors. So sort of looking across things like infrastructure, mining, private equity, banking, and plenty of real estate stuff as well. So you sort of see things when things go wrong, see shareholder disputes, like recovering loans that have gone wrong, deals that haven't worked. So you sort of see all of that stuff and learn quite quickly those bits of sectors that are translatable, and sort of see that pattern recognition, and then quickly try and learn what the uniqueness of various sectors is as well.
So you were there for just shy of 8 years or so.
Yeah.
You worked... What was your mindset after a couple of years? I guess you got qualified, right?
Yeah.
And then in litigation,
Yeah.
working across lots of different sectors. Did you kind of look up at the parapet and think, what do I want to do longer term? Or is it a case of you're just in this great organisation, heads down, just running at the work that's in front of you and enjoying it?
I think to start with is head down and work hard as you do. And I think people probably know you do at firms like that as well. You put a lot of hours in. So it is just get stuck in, see how much progress you can make, learn quickly. And then I think slowly, and I'm probably a bit slower developer in that sense, is starting to realise sort of what makes you tick as a person. And I think for me is always sort of that itch I had to go towards a sort of business or sort of investment side of it, general management, whatever you want to call it, is rather than just doing the legal side of stuff, is sort of see the whole gamut of a deal, like what are all those different aspects as well, and sort of increasingly found myself just being interested in and wanting to see that other side. But like, I love my time at A&O, and a huge amount of experience, and learned a lot really, really quickly, as you tend to do when you're putting quite a few hours in.
So it was a case of wanting to kind of move and take a little bit more ownership in terms of decision making, and then transparency over a whole process from start to finish, rather than just dropping in and out on various different transactions or issues.
And I think it is, and probably deep down, and this is probably the bit you sort of find out about yourself, is I'm probably deep down a little bit more of a generalist, and sort of thrive off that sort of newness of stuff coming in, having a look at things as well, and wanting to try and balance all those different aspects to a deal, a business, something else like that as well. And also start to help build businesses as well, which is a hugely exciting thing. It's hard, but it's a really exciting thing to do.
So was it a challenging time, just given age and stage, after kind of nearly 8 years working in the legal space, built up a good reputation, client book, exposure, and no doubt kind of remuneration and expectation, to then transition into the real estate space? And how did you choose real estate as an industry too that you wanted to move into? Yeah,
it's always that classic time, sort of interesting timing. Just got married, had our first child on the way, and I think for me, sort of get to that point where you think, if I'm not going to do this now, when am I going to do it? So you've got to just take a bit of a punt. So took it as a career break from A&O, who were great all the way through. And they sort of said, look, if you come back, we'll pay your fees. If you don't, you're on your own tab. And so sort of went off and did an MBA for a year. Partly, I think, just to reset, try and get that distance as well, because I think going into that legal space, actually you get picked up quite early, sort of second year of uni, and you sort of through a third year of uni, a couple of years of law school. I think it was probably sort of 7 years at A&O when he stepped out, and so probably hadn't had a good look around for nearly a decade at that point. And so part of it was saying, what else is out there? Part of it, I think, a little bit was just giving people enough certainty that, look, this guy can do the numbers. And I sort of did economics as a first degree, as I said, but I was confident I could do them. But I think sometimes you just got to refresh and really show people that you can do it. And also then meet a few new people, get some more experience as well. And so for us, sort of all of that sort of moving up, my first child arrived halfway through that year, so it wasn't exactly a sort of chilled year. And
did you move house as well, by any chance?
Yeah, moved house
the
a
whole
couple
works
of times.
then.
Yeah, just did the whole thing. Moved out of London.
Got married, kid,
everything.
sacked the job
Full
off,
shebang.
new degree.
Early 30s, off you go.
And where did kind of real estate factor into that process? I guess, take a step back, look above the parapet, talk to some friends, contacts, and other people outside of the industry to get a bit of perspective.
Yeah.
Also give yourself the confidence that you've got the numbers and probably a bit of self-awareness in terms of what your skill set is as well. Where did real estate factor? Was that kind of conversations with your old man or?
No, not really. I suppose sort of speaking to people, a little bit around that. And then for me, it was sort of actually one of those things with not massive design. For me, it was sort of like, where's going to be the right opportunity? And during that year, I did a bit of work placement with Octopus at that time. And we sort of went in and did 4 or 5 weeks work. And they said at the end of that, look, do you want to come back? And you sort of get to that point of the year, it's probably, 2/3, 3/4 of the way through the year. And you're like, right, I've got to decide now, am I going to step off? Am I going to go back to A&O? And Octopus, a great sort of growing business, values-based organisation, and for me, sort of willing to take a punt on me, which I think you've got to be realistic when you move across at a level when you're not in your early 20s or mid-20s is, right, am I going to take a step back, or how far at the same level can I get across? And Octopus are great. They sort of offered me something that felt broadly that I was moving across at a level. And so I just dived in and went for it.
And that was in the real estate team?
It was in the real estate team, but we were actually called Octopus Healthcare then. So at that point, we ran our lending business separately from our sort of healthcare and investment business. So we used to do a lot of healthcare investment. The team I joined actually was running a medical centres REIT called the Medics REIT. So it's about 800 million investing in sort of GP surgeries, trying to work with the NHS. So spent the first sort of year, 18 months up and down the country, trying to do those deals. So both investment deals, but we also have a development business in-house where we were sort of doing it off the balance sheet as well. So real change quite quickly, but also the rest of Octopus at that time, healthcare was doing quite a lot of private equity style investing, partnerships investing into healthcare, care related businesses as well. So it was blending that, what people now call sort of highly operational real estate, and doing that both from a development, a little bit of operation, and then some investment stuff through the sort of longer term funds like the REIT that we managed.
And so did you feel that your experience and the grounding you had at Allen Overy, kind of being able to jump in and out of different projects at different stages, kind of translated and enabled you to excel in that environment? Yeah,
I think it's helpful. It's just like you're used to having to sort of get on top of a fact pattern quite quickly, so you sort of get stuck in. I think the other thing is as well is used to sort of dealing with the public markets and public companies as well. And the first fund you're going to manage is a REIT, and so there's sort of a public element to that as well. So that was really helpful. And also you're sort of, and I'm now a long way past it, but you're sort of still a quasi lawyer at that point as well. And so you tend to find that the legal problems start finding you. We have in-house lawyers at Octopus. We don't have loads of them. We're not really heavily legal led. And so you sort of play that sort of role somewhere in the middle and just adapt, be reactive. You're in a growing team and you sort of just muck in and do what's in front of you.
So if you take a step back, you kind of touched on already. Can you just paint a picture of what Octopus was then? Because the energy business is probably what it's known for.
Sure.
People who maybe not in real estate listening to this, that's probably the kind of the main thing they think of when they think about Octopus.
Yeah.
But can you just talk about the different strands and then the platform and the business that you joined too?
So Octopus is coming up to its 25th birthday next year, and it started life and still is an investment manager, and it started life running retail money as well. So 3 guys in their 20s, left a bigger asset manager, and with that mindset just went out and said, we're going to set up our own investment management business, and did, and have made a huge success of it. So at that time, and it's still in the business today, just that ethos running through the business of we're part an investment manager and a fund manager, and we're part a startup. And I think that mindset persists today, is like, let's have a go at new stuff. Let's not afraid to do things a bit differently, but we've got to have all of those really sort of core fundamental skills that you need to be a good investment manager as well. So when I joined, healthcare and our real estate lending business were separate, and we pushed those businesses together in about 2019. So I think it was sort of first quarter of 2019. So that business now has been together sort of five coming on for 6 years now. And we just felt, we looked at the business as a whole and thought, we're doing all this real estate, we're sort of keeping it separately. We're probably not making the best use of all of that cross-fertilization, networks, origination, and just skill set. And it's the good times, the origination, but in the times when things go wrong as well, it's team, it's get the network in, share the problem, do it all together. And so I think bringing those two businesses together made a lot of sense and has now allowed us to sort of grow and really step on. And as you have to do, sort of keep growing up in the right way as you go and keep maturing, as all organisations do. That the structures need to change every so often.
And so outside of real estate, did you have the ventures, sustainable infrastructure, natural capital, energy, and other arms as well?
Yeah, so, and that's a good way to sort of take back, what are those key areas we choose to play in as a business, as Octopus? So sort of key areas are venture capital, and that sort of goes back to those retail roots. The kind of capital we raised to invest was to invest in those early stage businesses. Lots of infrastructure and really early into solar, I think, is one of the key things. And out of that, and being familiar with the energy markets, came Octopus Energy and an investment we seeded off the balance sheet at Octopus, and happened before I arrived at Octopus, that started on that journey and then has just grown rapidly now, and to a point where sort of 2 or 3 years ago sort of needed its own identity a little bit more. So yeah, you sort of go around the UK and even some places around the world now, and people know Octopus Energy, which is fantastic. The investment management business is still there. It's still big. It's still going strong, and it's growing as well. And I think for us is those key areas still of infrastructure. What else do we need now in that sustainable infrastructure? What else is going to help energy transition? And then just keep looking at that stage beyond as well. So something like natural capital, which we're having a look at, but want to do it high integrity. We've seen people go, and of course early movers always have those headwinds to face, and people have made huge progresses, but how do we sort of take it on the next phase, having done it 2 or 3 times in other sectors, in solar and renewables, in a lot of the healthcare sectors, in the real estate market that we invest in as well. We've been an early mover into those sectors and then scaled up basically.
So a couple of things just in terms of kind of capital. You touched on kind of retail capital, but then also institutional capital.
Yeah.
Was that always a blend of retail and institutional from day one, or was it kind of retail led? Yeah. And then as the business kind of scaled, you decided to kind of bring in institutional capital?
Exactly. So yeah, retail led, and then the business, so you get to that stage where you start to move into that markets where can we invest and deploy some bigger chunks of capital. And also Octopus bought a real estate manager called Medics, which was what formed that healthcare business as well. So it brought with it some institutional capital, and then we've grown that. And so then that balance starts changing. So you've got that good mix then between retail and institutional. And clearly then the institutional money, and if you look globally as well, has got quite a long way to run. And so you keep growing there and making that progress. But it's really important as well. I think the retail element is key to us and our identity. We're used to dealing with lots of people, as you do with retail investors. We're used to working in sectors where there are lots of people there. We're quite people focused. In the real estate business, sort of 80-90% is in the living sectors. We feel really comfortable there. And we know some managers and bigger managers sometimes look at some of those sectors and think, oh, is there reputational risk? Are there people there? Yeah, there is. And there's regulation, and probably more regulation around it. But we're used to that. It's sort of do that, lean into that regulation, build your own teams, and really focus on end user, customer, consumer.
So the lending business, you had the lending business and the healthcare business, and if I'm not mistaken, you kind of exited the healthcare business, or part of the healthcare, or that listed part, to PHP.
Yeah,
is that right?
Yeah, classic sort of public markets. It can happen sometimes. Is sort of that aggregation happens, and so sort of early 2019, PHP bought that fund. In terms of sort of the assets they invested in, exactly sort of complete overlap. It is medical centres. It's the same covenants underlying it as well. So yeah, sort of scale play there. And so that bit of the business went in terms of doing medical centres. We still had a few developments that we sort of brought through in that space, but then had a growing, and by that stage already quite big, care homes business as well, which again, sort of newer sector in the UK. Clearly care provision's been done in the UK sort of hundreds of years, but in terms of that institutionalization of the real estate side of care homes, a really early mover, sort of moving to that sector sort of 2010, 2011, before Octopus sort of acquired that business. And then that's something we've just kept on growing.
And then talk to me about the lending business as well.
Yeah, so sort of Real Mix there does sort of 2 or 3 core things over time, and again has evolved. So we do quite a lot of residential lending, so buy to let and bridging down to sort of single houses and assets, sort of good deal flow. We sort of do 300 or 400 loans a year in that business, so sort of good turnover there. And then for us, that specialism is then really focused on working with developers. Who do we like to work with? We like to work with people who are making stuff happen. So we do quite a lot of bridging, transitional development lending as well. And again, 80-90% focus on the living sectors. We do some stuff outside there, but funding that whole sort of life cycle of people. So we do quite a lot of debt financing to student. We do some co-living. We've done some co-living sites, build to rent, build to sell, affordable housing, and then retirement and care. So in that lending space, sort of covering that whole life cycle of a person, and also covering the life cycle of real estate. So we'll fund the site, we'll fund land, we'll fund development, we'll fund stabilisation and refurbishment, and we do a bit of term lending in that commercial space. But clearly, sort of the insurers, the banks will be the market. If you're looking at investment grade, that's not us. We're in that sort of slightly higher energy end of it, but that's where we want to be.
And then as well, you've also got the retirement homes part we haven't touched on. When did that come into
so that sort of grew up some out of the sort of private equity style investing that we were doing, which is sort of investing into those early developer operators in the UK, trying to borrow some of those models from New Zealand, from the US, and slowly evolving them. And then really sort of kicked on in 2018, and Kevin joined us to sort of head up that business and really sort of growing that as an institutionalized product as well. So can we put capital into that, having seen that growth in those other sectors, knowing that we've got that powerful demographic trend which underpins our care home investment, but is sort of moving the whole time as well, is appropriate housing for people who don't yet need care as well. And so for us, it is, how do we commit to sectors long term? For us, it's not an opportunity in and out. It's being able to sort of be in there, sometimes earn the scars on the way through, but just be persistent, keep working, find the right opportunities, and know that in time, that every day there is more and more demand for your product, and it keeps coming through as well. So yeah, it's a natural sort of move from care homes from us as well. So in terms of those equity strategies, now we have care homes, retirement living, and affordable housing.
Yeah, and you bought an RP a few years ago, if I'm not mistaken. Was that your kind of your move into affordable, and what was the reasoning for doing that?
Yeah, so it's a sector that we looked at for a long time, and I think sort of for the business is always, where do we choose to play? And you can always sort of say, you get to a certain scale, is let's just do every sector, let's go quickly, let's try and do that. And I think we look really hard at where we have competitive advantage, where it makes sense, where our people are used to dealing with it. And I think for us is affordable housing made a lot of sense there. Clearly all the living sectors, the residential that we invest in all the time. We've done loads of debt funding of affordable, but also had team members who had experience from the social housing sector, had spent a long time in registered providers themselves. So for us, it was, how do we start being part of that wave to bring capital and equity capital to help move that affordable housing forward? Clearly, the banks have been lending into the space for a long time, but clearly we also have a shortage of affordable housing, and so it needs that capital injection to do it. So for us, it was set up a long-term play. And as I said before, regulated sector, rather than sort of try and structure around it, for us, our attitude is always go in, be regulated, subject yourself to the regulation, be a peer and hold yourself to the same standards. And then you can build a long-term business based on trust, based on working with parties who are also wanting to be there for decades or centuries, as there have been in some people and some of the early charities into social and affordable housing. So for us, that's very much it. Build the team and then sort of keep going from there.
And it's for profit rather than
It's a for-profit registered provider, exactly. And I think underpinning that with Octopus is always remember is you sort of, people see Octopus, they see the sectors you're in. We're also a B Corp, so one of the sort of first financial services investment businesses to be a B Corp. We've just recertified now after 3 years, and the score's sort of gone up to 122, and the threshold for being a B Corp is 80. So people look at it and say, look, is there a lack of commerciality there or something? Like, no, there isn't. Hyper commercial, and you sort of look at founders, board, everybody else. We're super focused on commercial. It's just the way we choose to do business. go into sectors for the long term, try and make those sectors a little bit better and lift the tide and succeed that way.
And I guess apply some of that entrepreneurial spirit, DNA, and approach once you've kind of got in there within the confines of the playbook or the rules that are there. Quick one from me. If you haven't already subscribed or followed this show on the podcast or app where you listen or watch, please do. It takes 10 seconds and helps tremendously. I've got really big plans for the People Property Place podcast, and that one small action really, really helps grow the show and the presence and enables us to keep doing what we're doing. So if you haven't already, please follow or like on the platform you watch or listen to. Thanks so much. Your role initially was in corporate development, if I'm not wrong. Is that
that was the role before the current one. So I started doing effectively sort of originating deals for the REIT that we managed. And then when that was acquired, switched over to running the care homes fund.
And so you kind of moved into more of a fund management
role doing that.
And was that a kind of a big transition, moving from being more transactionally orientated to kind of being more kind of strategic and more fund management?
Yeah, I think you still got to get stuck into the deals. Like that, we're quite a big team. We're 90 people in real estate, but it's still not huge. So you still got to be close to the deals. You've got to be involved in them, sometimes originate them still. But I think, yeah, you've got to step back a little bit and start trying to bring that objectivity into your role and trying to make sure you're making those good long-term decisions all the time as well, rather than get sort of deal fever and energy, which is a hugely important thing to have, and it is what gets deals done. But you've got to be able at some point to start stepping back, start thinking about financing, and really as well, I think, bringing sort of day to day, are we delivering for our investors as well? And that's really, really important, and taking up that fundraising. And I think fundraising and being out on the road raising money is really powerful to make you think about then how you're investing it. And are you getting that match? Are you getting the feedback from your investors? What do they like? What don't they like? And remembering that investors always have a choice where they put their money, not just in terms of managers, but sectors, and regionally, the geographies as well. And I think the more you're thinking about that, the better.
In the kind of investment management, private equity, fund management world, there's lots of different kind of structures and fund structures. Yeah. Typically, 3-5 year turnaround. We're talking about committing to a sector or an asset or a strategy for a long-term play. Yeah. How are your funds set up, and how do they enable you to do that? Yeah. Do you have kind of a number of evergreen vehicles?
So we've got a real mix of everything. So we have some evergreen strategies. And some of these started life as sort of closed-ended, classic, more private equity style vehicles that then have created assets that people want to hold on to. But yeah, certainly that evergreen style structure around some of the sort of core plus style investments we do, income led, allows us to take that really long view. In those funds, we often think about being a forever landlord. People sort of say, what's your hold period? And it is nice just to be able to think, well, I just want to hold this asset for as long as it's well placed. And the sectors we're in, and things like care homes, you're around the country. It's a needs-based sector. If you get an asset in the right location, close to people, it's delivering the right service and the rents are right, then that's a great asset. We actually, in our care homes, actually have very little inside the M25. It's just one of those things. We spend a lot of time out and around the UK. There can be great investments in the living sectors everywhere, as long as the rent's right and based right for where it is. So we've got that. And then on the more sort of value add side and on some of our debt funds as well, sort of classic 5 or 7 year style fund, as you'd expect in sort of more private equity. And then a few sort of SMA styles or forward flows on our debt side as well. So we do a little bit of everything. And it's just like making sure you're sort of switched on well to that mode. There's always this thing, though, that even with closed-ended funds is actually investors want to invest with a manager over various vintages. And so at some point, they start to blend into it. It's dollar cost averaging through that cycle. So you sort of hope sometimes you can obsess over which style of fund you're going to go out with. Some investors do have a real preference. Some don't. Some just want to know that the investment's going to be good. They want to back you for 10, 15 years anyway. And so whether it's evergreen or closed-ended and they go through a few vintages, it doesn't matter.
It's ensure you've got the right product for their needs at the particular time,
Exactly.
and then you can kind of evolve in due course as more opportunities present themselves. How difficult has it been raising capital? Because the last couple of years have been a challenging fundraising landscape from the conversations that I've had. But apart from a few exceptions, it's the ones that have got a particular kind of niche strategy or a focus have been able to raise money. Not easier, but they've kind of been able to raise a little bit more straightforward.
They get some of it.
Yeah, quite. And especially managers within the living or a kind of a bed-focused strategy. So have you found it really challenging, or is it a case of kind of testament to kind of re-upping investors in that long-term?
Yeah, I mean, it's definitely been harder. And I think it's what central banks are trying to do, right? Which is take the heat out of the market, take liquidity out. And that's what happens. There's less money to go around. And so you see that and feel that. And investors sort of rightly cautious, again, depending on their mindset as well. So I think you're right in terms of those sectors where, when the capital flows have started coming back in, have probably benefited sort of disproportionately to where it was before, are things like beds, logistics, and you sort of hear that theme again and again. So it's good to be in those places when it comes back. And I think the other big thing as well, the sort of narrative straight away, which is everyone only wants value add when the markets turn as well. I think they want value add returns in terms of numeric returns. Do they suddenly want to take loads of development risk? I'm not so sure. And I think it's that blend. So we obviously offer a bit of both. We have value add funds in the sense of we do take development and fill up risk. We also have core and core plus funds. And there are opportunities in both when markets turn. And I think making sure you remember that and actually, in some ways, sort of buying income which looks a little bit undervalued can actually lead to really, really good returns, particularly in evergreen strategies where you're investing over a cycle and you want to keep doing it. It's a nice time to have bought. So I think you've always got to do that. You've got to react to what investors want. They certainly have said they want higher returns on some things, although the most money we've raised in the last 6 months has been into our core and core plus funds. So it always comes in both ways as well. So I think you've just got to keep speaking to investors. There's clearly some distress to work through for everybody in the market as well. And I think you see difference both on the deployments front, but also fundraising front, is those people who've got a relatively clean pair of heels and have got the headspace to be able to invest again or deploy again and go again, and those who are dealing with a bit of baggage, which is understandable at the end of a cycle. So I think it's just being patient, being good at what you're good at, using the dry powder you do have wisely, and then just keeping relationships strong and working with investors to come out well the other side.
In terms of the team, you mentioned kind of 90, 100 people or so. Do you do everything in-house, or do you also kind of lean on external partners as well?
We do a lot in-house, and I think sometimes sort of other managers we speak to as well, particularly sometimes some of the US managers are like, what's everyone doing? And I think part of the understanding there is we deal in sectors where the lot size tends to be a bit smaller, and so we tend to be a higher volume, higher touch manager, and those operational sectors, I think to really invest well in them, you've got to get into the assets and really understand them as well. It's hard just to do a lease, stick it in the drawer and hope it all works out well. So we're quite hands-on. We do a lot in-house. So on our debt side, for instance, we pretty much do all of our servicing in-house. We do all our portfolio management in-house and originate in-house. And so sort of the full works, you see all of those loans. And most of the teams sort of work on that basis. Clearly, there are certain partners we work with and professional advisors who are sort of key parts of what we do. But I think our gut reaction normally is, can we do it ourselves, build a team, build that functional skill set? And we're quite, as a result, quite diverse as a base of people. So we've got sort of people who are out and out real estate investors, accountants. We've got a lot of people from the construction side as well, ex-developers. and then the specialists in their teams from sectors, and also 3 nurses. So headed
I was
up by
going to say
Carrie.
that.
Yeah,
because
which is really weird for a real estate investor.
Quite.
But you sort of look back at where we started, loads of healthcare investment is, how do we invest well? We've got to make sure the care in the buildings that we own is being delivered well. How do we work with partners? And remember, a lot of operators in the space are growing themselves. Some are massive and have all the internal functions and all the risk and governance. Some are still growing. And so for us, it is, how do we work with them to help them get better as well? We don't do this in a sort of purely extra inspectorate layer. That's not it. It's how do we work with them? How do we, yes, take some data and sort of work out where we think things could be better or where they're going well, but also how do we help make our operators better to the extent they want to do that as well? So yeah, sort of
so having those in-house nurses as well helps with kind of product market fit and kind of helps your development team.
And it's amazing. And people think, oh, is it just sort of going around care homes and saying it? No, I guess the point is our nursing team will look at the plans of a care home we're going to invest in and say, oh, look, the line of sight down that corridor means you're not covering this or that. And it's those kind of things that you sort of build that institutional organizational knowledge over time. And then maybe the investment team can take a bit of that. And maybe you don't need to ask every silly question about healthcare to a team who would get exasperated with us as well. But it's working together and seeing people as really important equal parts of that. And our nursing team present on our investor calls. It's really important because we're a landlord of care homes. It's an operational underwrite based on whether those care homes are performing. So yeah, it's sort of a key part. And we don't mind being different in that sense. And I think that is that sort of Octopus theme is if we need nursing coverage, if we need loads more construction team, if we need this, let's go and hire it, build the team.
How competitive, we touched on the fundraising piece, but how competitive it is in terms of deal sourcing at the moment?
Yeah.
And are there more managers and other capital allocators looking to kind of get into the sector? And have you seen what's the competitive landscape when you're kind of like deal hunting?
Yeah, it's really interesting. I think, I'm sure like sort of your other guests as well, is I think there are really different risk appetites in the market at the moment. There are clearly people who are, and just the weight of capital it has been going towards some of the living sectors more recently. And so there's always that risk of, do they get overheated? And I think that's why you've still got to be good at your asset level underwrite all the time. Clearly there's sort of been a levelling as interest rates have gone out. All sectors to some extent have rebased, sort of started the horse race again. But you've still got to be good at asset level. You can't just pick a sector or just spread it everywhere and think that it's all going to work. So yeah, we've definitely seen more people come into the living sectors as well. I think for us is we like, particularly on the equity side, staying in our specialisms where we know it takes some time to build up that organizational knowledge, the trust, the networks that you need to do it. We originate a lot in-house as well. So I think that's another sort of important aspect to it as well. But sectors sort of do come and go. And it's really important for us to remember that there are other sectors that our investors can choose to be in as well. And so we've got to offer something on a risk-adjusted basis that keeps making sense to them.
Something that we've kind of danced around a little bit here is people and the importance of the people. How do you balance kind of ambition and drive and building the business with kind of retaining the culture of the team at the same time?
I think sort of people and team is sort of one of those biggest challenges always in a business is how do you attract sort of great people with good energy, particularly with us sort of going into new areas, doing things a little bit differently. And you've got to balance those sort of formal, when you get to the size that we are now and Octopus as a whole, sort of on the investment side, 600 or 700 people, you've got to balance those formal, really strong recruitment routes, right from sort of internship and graduate, and then have all the informal side of it as well, is how are we bringing people on, how are we mentoring them, how are we giving people just opportunity to do work that they enjoy. And so I think it's trying to find and hire for the right thing for the organization as well, which is sort of hiring for energy is really, really important. And the leaders in a business can't bring all the energy to a business, particularly when you're trying things. You've got to bring a lot of it, but you still need help sometimes as well, because otherwise you'll frazzle yourself. So you've got to have that sort of relentless team energy to sort of keep moving forward when you try things. I think you've got to want to and proactively build a team of people who want to be team players as well. And I sort of said at the start, it's important in the good times. It helps origination. It helps build networks quickly. It's just vital in the hard times. You've got to have people who share problems, want to get stuck in and help other people when deals haven't gone as well as they should have done. So that's really key as well. And then, as I said, in real estate, we sort of built a formal graduate recruitment program over the last 2 or 3 years, sort of that rotation around our teams, bring people through and bring really sort of great young people to sort of keep everybody else on their toes, and it brings a huge amount of energy to the business doing that as well. So I think all of those things really, really important, but hiring for team players, hiring for energy.
I think energy is massive. I don't think people talk about it enough. I think it's one of those subconscious things, but that people look for, but they don't necessarily overtly state it as a key thing that they're looking for. But I completely agree that energy is so important and massively underrated. Octopus has got an amazing ambition in terms of looking to get to 50 billion under management, if I'm not mistaken, by 2030. Is that right? From a 13.6 billion starting point.
Yeah.
Massive. It's kind of 4x in 4 years, 5 years or so, 6 years even, if I can do my maths correctly. What part does kind of real estate play within that kind of expansion?
Yeah, and I think it's quite a big part. And I think if you look across those sectors and when you're talking those kind of numbers, clearly you've got to be in some of those real sectors where there is capital intensiveness to them as well. What's the purpose of having a goal like that is really to sort of set ambition and the scale of that ambition as well. And a key part of it is also what we want to invest in. So it's those ideas, people, industries that'll change the world, which seems quite high and lofty as an ambition as well. But I think it again just actually drives us to be really focused on what we're doing and what we say no to. Because as an investor, you can always sit there, look at the investment universe and get a little bit overwhelmed. And sort of where do I start? And I think some people sometimes look at those managers who go at it with that kind of focus and say, look, is it restrictive? Does it hold you back? Actually, no, it's really nice. It's really focusing. Like, you know, quite quickly where you want to play and who you want to play with because of the values that you have around it as well. And it means that actually you can move through and really work out and bring real effort, like concentrated onto what you're trying to do. But clearly we've got to grow and you sort of look at those two dimensions. Is it more sectors? Is it more geographies? And also grow what you've got. You've got to remember as well that you're most likely to grow from what you've already got and add a few new things on now and again, which is what we're trying to do. And so for us, I think is where we're specialists and have built those sector specialisms, let's make use of them. Let's keep growing them. And our investors have said the same to us. We like the way you invest in those sectors. Can you start expanding it? And particularly as we raise more and more capital, global capital, we've always had a lot of European capital, but have started to raise more money from further afield, is looking at it on a regional basis. And so for that is one of the things you mentioned at the start is why are we moving into Spain and doing that is that for us is one of those choices. Let's take some of the sectors we know well, look for places where the fundamentals in those sectors we think are attractive and will be over the long term, and start to do that and do it really deliberately and carefully rather than sort of just running around and thinking that we're going to do it quickly. Got to build local expertise, got to have the right team as well.
And so does that, you may have touched on it, does it come from investors coming to you to say, look, we want to back you, we want you to expand? Or is it you going to investors to say, hey, look, we've got a good thing going on, we know the rules of the game, and this is what we want to focus on. Will you back us if we go into Spain or kind of wider European countries? How does that conversation evolve?
It's got to be both. And I think some people always say, like, it's just listening to one side or it's just looking at the other. And my view, and it's a personal view, is you've got to do both. There's no shortcut. You've got to, and I think you've got to listen to your investors. That is vital. But you've also got to remember that lots of managers are going to them with lots of ideas. And so there's a limited amount of bandwidth that you're going to get. And so you've got to have done some of the groundwork before you go to them. And co-creating is really important, but there's got to be a kernel of something there to go from as well. So I think across all of our teams it's both. You've got to match that capital to the investment opportunities long term and believe in both, because investors will look for commitment from you as well into those sectors. Why do you want to go there? So yeah, I'm not someone who sort of subscribes just to go just one way or the other. You've just got to do both. It's hard, but you've got to do both.
And you've got to have some skin in the game to kind of justify your reasoning. So talk to me about the process of landing on Spain.
Yeah.
And what's the strategy? What's the plan? What is the first thing that you're going to be kind of looking at when you land?
Yeah. So I think we looked at what we're good at and in those living sectors and particular specialisms around that later living as well. And also knowing we've always got our debt business as well, which is probably that most generalist across them that can work. And we sort of looked at it, each investment team looking independently and sort of saying, look, where are those sort of 2 or 3 places that seem pretty attractive to us? And we looked at Spain, sort of demographics that are moving towards that older population, as most developing countries are, but certainly there in Spain and happening now. A great health system underpinning it, because we invest in a lot of health and care related real estate. So that's really, really important. At the end of the day, we're a real estate investor. We're not taking our investors' money and taking massive healthcare risk for people as well. So that's got to be there. Some great developer operators in Spain coming out in that space, but perhaps hasn't had the weight of capital into some of those sectors that we've been in, maybe that the UK's had for a little bit as well. So for a number of those reasons, we sort of thought, look, it is a good stepping off point. Clearly you have to pick somewhere to get going. And a couple of the teams it came high up on that list. And so you sort of say, right, let's go for it. And then in our style, and then start building the team. So what are priorities is recruiting the right team, getting that right. As you said, sort of I'm going out there for a bit to get it going, which we think is important. It's a step out for us. We've got to bring everybody with it. We've got to take some culture, but then get that team right, and then it can start sort of going in the rest of the business and take those other strategies as we sort of evolve.
So you're moving your wife and your 2 kids, 7 and 5?
Yeah.
7 and 5 out to Madrid, taking them out of school to kind of go and set up the new kind of Octopus platform. How many other people are you taking from London?
So there'll be one coming with me to start with. We're hoping that we're going to have a couple of team members from Spain join us pretty quickly as well, and then sort of 1 or 2 others from Octopus as well coming there. But keep building it, and I think you've got to get that initial early presence and then sort of keep building from there as you raise that capital.
And so you're going to be running the Spanish expansion plan, but also the UK platform from Spain?
Yeah, well, I think the key thing is getting the right team in to run that Spanish business as well. And me being based there for a bit is going to help that as well. So sort of as you'd expect, sort of running a business, 30 or 40% of my job is growing new things. That is clearly a new thing we're growing. So that emphasis there is focusing and helping that team grow it. Am I going to be doing everything day to day? No, there's no way I can do that. They're sort of running the rest of the business as well, and making sure there's the sort of right number of trips back and making sure everyone's going as well. But we've got a really strong management team, sort of 6 or 7 fund managers across our various strategies as well, and they all run their own businesses and funds anyway. So it is to help sort of bring that focus and commitment at the start, like we like to do, is go all in, get it going, and then in the right way get back here and let that team get on with it, and then 1 or 2 people from London sort of go as we grow. And
am I right in saying that you've got a 200 million euro JV with, is it Neynor? Is that right?
So one of those first deals, exactly. So we're looking to sort of do as sort of Neynor have announced, that retirement rental strategy into Spain early on, and are out there sort of raising that capital to fund that strategy and sort of go through. So yeah, exciting step for us.
So they'll be kind of the operating partner, bring the local expertise,
exactly,
and you'll bring the kind of capital and oversight there in terms of how you build it.
Yeah.
And then without, appreciate you kind of focused on Spain. What's the kind of the wider vision and wider plan longer term in terms of kind of expanding the kind of the real estate platform? Yeah,
so for us, I think it is, again, sort of that similar exercise we've done before, is sort of how do we do that next step, when's right. But I think for us, it's sort of short term, near term is get Spain up and going well. We've also done a bit of lending in Ireland. We used to do a bit of investment in Ireland as well, in the Medics Fund days of the REIT as well. So we've always done a little bit there as well. So how do we build out that sort of euro denominated side, and then at the right time sort of make the right next step. And obviously Octopus as a whole sort of looking at where and how it grows.
How has your role kind of changed since you joined the business? And did you have aspirations early on to be running the real estate platform?
No, I think sort of for me it's always been like, just do what's in front of you, do it well, enjoy the next thing, the next challenge when it sort of presents itself, and try and do a good job. I think what's changed massively is just, firstly, I spend most of my time working and thinking about people, and it really changes from that sort of deal focus to the business and people focus. And then, as I sort of talked about, choosing where and how we grow. So that's the biggest changes, and knowing that I haven't got the time to sort of dive into everything all the time and oversee it. So we've got a brilliant team. It's why we have 90 people there. They are the experts. They have a huge amount more expertise than I do in a lot of what we do. It is knowing when maybe you do need to go in and help out or challenge, but very quickly getting back to thinking what my job is, which is looking at some of that longer term direction as well. So everything is, and everybody is really crucial to that picture. It's just a different sort of focus space, I think.
So as a platform, we've spoken about the different parts of Octopus and the different strands within the business.
Yeah.
How do you bring those together, and how does the data that you have in one part of the business inform strategy or inform another part of the business? Do you look at that and leverage it?
Yeah, I think it's sort of, as you grow and get bigger, you are generating data points as well, and then there's that question of sort of how do we collect it first? How do we use it? And I think doing things like becoming a B Corp in the real estate world, sort of submitting into GRESB and all of those kind of certifications, it drives you to start to be good at collecting data. But it does it in quite a specific way. And I think for us is always, how do we sort of come up with our own rules, what we want to get out of that data as well. So clearly a big focus for us has been on the energy side to start with, and you've got a sister company, sort of a massive growing energy business who's right at the front in terms of technology, what you can do in the home in terms of not just generation solar PV, but how do you connect it up to batteries, your electric vehicle, and just manage it well around the home as well. So a lot of it is where we can sort of working with others over at Octopus Energy, a lot really thinking about all of the products they're offering, zero bills homes. How do we do that onto some of our sort of commercial buildings? And I mean sort of things like care homes as well. How do we start to decarbonise our care homes, both our existing stock and new homes? So always being at the forefront of that. And then you're starting to use that data through as well. And then you've got the whole healthcare side to it as well. So how can we start to work with our operators to start to collect that healthcare data to make things better and share some of that data back to them? Because I think for us, it's not about us capturing it, using it, and necessarily just sweating it for ourselves. Is how do we give some of it back? How do we start to notice trends in the way, say, a care home operates from our data, and share it back to people in a good way, saying like, this is how everybody can get a little bit better as well. So energy has been a key focus for us, as you'd expect, for a long time. And you sort of look at some of our funds now and the GRESB ratings on them and the way they've gone through have really sort of driven forward there. And it helps just having that mentality where you're driven to look at everything through that energy lens. But yeah, as I say, there are those other aspects to it, occupational data, care data as well, that's really important. You've got to manage it correctly and do it properly. And clearly stepping into affordable housing, where not only the regulator, but being a good landlord, fundamentally, how do we do that well? So data is sort of really key to all of that. And we spend quite a lot of time and quite a lot of money on that and making sure we've got the right platforms to do that.
I guess it's all part of that B Corp kind of journey approach, giving, sharing and enabling other people to make better quality decisions. When it comes to kind of cross-pollination that you've touched on, is it a case of you look at deals and you can go, oh, that could be an affordable, or I could underwrite it as an affordable play or a care home or a retirement play? Is that a benefit as well in terms of having some strategies quite closely linked together?
It is, although it's amazingly how how that doesn't really come up. It's amazing. You set up all your conflicts committees and everything else like that, and you sort of have those standing conflicts. Are we going to be having these sites all the time that could be one or the other? And actually, no. It tends to have been at some point already a development partner's already taken it to that point where they've got a consent on it as well. So you tend to know what that building's going to be. What it can mean, though, is increasingly where you've got mixed-use developments. In the earlier days, and I sort of go back 5 or 7 or 8 years, there were a few people trying to do it, and it was a little bit harder. Planning was perhaps a little bit more difficult around some of that. I think what we're starting to see now is that we can look at a mixed-use scheme, whether it's a big one or a small one, and start to fund various parts of that. And we're probably one of those managers who's got those various aspects and can do it. It sometimes starts with the debt. Can we fund the site? Can we sort of bridge it out of that consent while everyone's getting ready? Can we do a development loan? Then can we start sort of funding bits of that and maybe owning bits for the long term as well? Now, clearly you've got to get the pricing right. It's got to go through all of the right sort of committees and governance. That's really important. But it's being able to offer that solution to developers when they're doing it and unlocking it. Clearly, the banks have more and more restrictions around them on what they can lend on. And so our sweet spot remains being working with really good mid-sized developer operators, that engine room of delivering homes that people want across the country and now sort of outside into new geographies as well. Well,
Ed, you've had an amazing background, kind of switching from solicitor to real estate corp dev fund manager, and now kind of leading the wider platform in terms of kind of future growth. As we kind of draw this conversation to a close, a question that I ask everyone who comes on the podcast is, if I gave you £500 million worth of capital, who are the people, what property, and which place would you look to deploy that capital? Yeah, and I think it's really repetitious of what I just said, which is, where do we love? We love those mid-sized developers that have been and still should be that engine room of delivering really, really quite high quality places to live. So they care about it. They build buildings that are really fit for their local markets as well. And they've got really strong reputations as well. So for me, it is finding the sort of right 5 or 10 of those great developers and developer operators who you can fund. That's the sort of self-serving answer. If I was completely free, what do I do? I still think there's some growth to come in sort of hospitality and leisure, and clearly there are huge experts in that already. But you just look at, again, real estate where people want to be and want to be, whether it's on holiday, whether it's that short stay, and you see hotels really sort of pushing on again. So I think some of that stuff around there is sort of, there's more opportunity to come there as well. Is your corporate part of your brain going, the opportunity to kind of change rents on a daily basis is attractive as well as kind of the other kind of impactful parts? We're always looking for the next sector as well. Yeah, there's always that. Yeah, how do you price? How do you do those kind of things? And clearly there are people way more expert than us at doing some of that already as well. I think it is for us just delivering that space that's good, that people really, really want fundamentally, and that's why we have that big team to do that. Well, Ed, I'm sure you don't need it, but all the best with the move to Madrid in a couple of weeks, and really excited to see what you and the team go on to do out there, and in the UK as you build and reach the very high ambitions that you've got. Brilliant. Thanks for having me. Thanks for listening to this week's episode of the People Property Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People Property Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information. Or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you next time.